Want to ask you order?
Go ahead. This one is?
Yeah, that's fine.
And we are live,
Yeah, we are live.
right? Yeah, we're live. Yeah. Welcome, guys. We are live here. My last day in Paris, heading out today. It has been such a wonderful trip to Europe. 3 weeks over here in Italy and in France. It has been it's been interesting. You know, one of the things that is really interesting about it is that everybody thinks that everything is so bad over here, and they are more worried about what's happening over here than what's happening in the US. And I can tell you that we are in worse situation in the US. And I've been saying that for this whole 3 weeks. Guys, we're in a worse situation in the US. We have bigger problems to deal with than our compadres over here in Europe. They're doing fine. They're fine over here. And it's nice and relaxed. The cities, I think part of it is that a lot of our cities, we built them up so big that the population in those cities is so dense. And then, of course, you kind of have no like hope of ever voting over those people because there's too many of them. You know what I mean? And here, like you walk around Paris, and Paris is full of French people. I mean, there's a lot of other people too. Okay, but it's French people. It's French people. Walk around Italy, it's Italian people. It's Italian people. Anyway, markets are pretty interesting this morning and afternoon, depending on, I guess, where you are. Bitcoin is continued kind of. It had a nice move up. It went down, and then hold on a second here. Can you hear me? Can you hear me? Can you hear me?
We can hear you.
Okay, good.
I can hear you.
Good. Sometimes when something like that happens, it messes with the audio. So, so we have a bit more of a consolidation, I think, going on. I do, and we'll see what our friend Matt, of course, is going to say. But I do pretty much believe that we're looking for an upward thrust here after this. I feel like there's just so much pressure on the market, and with inflation going crazy, I just feel like it just continues up. Possibly quite high.
I can hear him going with the upward momentum as well. Just reading the market, we're consolidating the last 4 or 5 hours, and it's just got to be up. It's Friday, maybe up for the next 5-6 hours before settling back. But
yeah, I mean, it'll be interesting. Of course, the the big guys a lot of times don't like to leave their trades in the market over the weekend, so it could pop around a little bit. But yeah, I think we continue up. Are you looking at my screen here? Am I sharing my screen? Yes.
On CoinMarketCap, yeah.
Yeah. So Bitcoin, you can see here, yes, slightly down. I mean, basically nothing almost here, 0.08 on the 24-hour. Ethereum is down slightly. BNB, the big mover today, up 4.5%. When I woke up this morning, I looked at it and I thought it was like 644 or something. I was like, wow, man. I mean, this asset was $200 and something not very long ago. So really something else, especially with everything going on with CZ and the SEC going after them and everything else. Pretty interesting. The big talk though today, really, I mean, gold and silver are going absolutely bonkers. Like gold and silver. And of course, this is something not only have we been saying, of course, and been very right about the crypto market, but new all-time records for gold. Gold is up here 24.14, and silver is looking even better. Gold futures right here, $2,400 and $14 per troy or per ounce there on your gold. And then look at silver. Silver is even prettier. It was up almost 4% here. Let's just take a look at this. We'll do it this way. Silver. Yeah. I mean, it's going to break. Look at that. Over 3.5% on the on the silver. So that's a pretty big move. I mean, this move from 2000 on gold and like 20 on silver, we're saying a 50% move for quite a bit, and that's really what we're looking at right here. Almost $30. Just so impressive. But that really tells you a lot of what's happening with the inflation, and it's around the world, but in the U.S. especially, of course, we are printing just so much money, and so that's a good indication of what is going on there. And let's see here, futures were kind of tepid. Dow futures a bit tepid. The Hong Kong Stock Exchange did take a bit of a dive today, which I thought was a bit interesting. Hong Kong Stock Exchange. This down about 2% now. This was down 3% a little bit earlier today. And so that's kind of an interesting move, but they can have a down day. Oil is holding over that 85 range. This move actually in just the last 2 hours, it was 85. Now back over 86. Let me mute this tab here. Back over 86. So it's interesting, David. You know, I'll be headed back. I'm headed back to the U.S. and it's actually fairly cheap right now in Europe. Which is kind of funny because I remember it now. You know, it just seems like it was so expensive there for a minute, but I don't know what changed.
Not in Ireland. Ireland is the most expensive place of Europe right now. It's ridiculous. The grocery stores, the gas prices, everything is very high here in Ireland. Real estate, rental properties, Airbnbs, they're all up.
Well, I know part of that is, of course, because they're providing asylum for so many people. And when you have that asylum system going, of course, the government is paying for so many. We have the same problem in the U.S., you know, where it's hard for people to buy or rent.
Well, the government is collecting 60% of the rental fees. The monthly people are paying their monthly rent for housing, and the government is collecting 60% of that.
Wow.
Isn't that insane?
That's crazy. And they're
crazy.
Like this whole taxation system that we've allowed to happen all over the West is just crazy. It's just crazy. And we are being taxed into oblivion.
Yes.
I mean, 60%. That's insane.
60%.
60% of the rental fees in Ireland go to the government.
Government tax, yeah.
Wow.
Yeah.
That's something else. So
staggering numbers.
It's staggering numbers. So if we have some time at the end of the show, I want to play one of the interviews. Maybe we play Lou Kerner. We'll see. Or you know what? Actually, let's play Lou on Monday. So from here out, we're going to do Crypto Mondays is going to be our show. Every Monday will be Crypto Monday show. We're going to have the Crypto Monday show. And
yes, it's Meme Coin Tuesdays.
And then we have, is it meme? No, it was Token Tuesdays, Wall Street Wednesdays. What's Thursday and Friday? Yeah. We didn't come up with Thursday and Friday yet.
Yeah. Well, we'll see what sticks.
We'll see what sticks. But I like that.
Thursdays and the Thursdays.
What is it?
NF Thursdays. Chris just
NF Thursdays?
NF Thursdays. Like NFT.
Like NF. NF Thursdays.
Non-fungible Thursdays.
Non-fungible Thursdays. Non-fungible. The non-fungible conference in Lisbon is looking pretty cool, David. And
yeah, that's a great one.
And they're doing the meme coin conference with it.
Cool. Yeah, that's definitely right up their alley.
Right?
Yeah.
So we're trying to track that. We've been going back and forth on whether we head over to Dubai for Token 2049. And it's looking like it's going to be a little tight. It's looking like it's a little tight.
I hear you. It's already hot in Dubai.
Well, that's what Matt was telling us, right? Yeah. It's hot. It's already hot. But it's sold out. Of course, we'd have to use which we have plenty of contacts to get in. But it'd be a real quick turnaround. I'd have to leave on Tuesday.
Yeah, it's rough.
My wife's already had it with me.
It's not a short flight from France either. You'd think it is, but it's not.
Oh, it's not a short flight from France?
No.
Well, I have to go home. I have the father-daughter dance on Saturday.
Oh, that's beautiful, man. Good for you guys.
Yeah. So I have to do that. So in the title here, of course, the US dollar, DXY, and Matt's going to talk a little bit about this more. We're going to bring on in a couple of minutes. I said the stocks and Bitcoin are steady at the moment. I do think those will continue to rise, though. The magic voting machines strike again. So, of course, with this whole deal with Brazil, now everyone's talking about the magic electronic voting machines again, right? And of course, you notice I never say a brand. I don't think it matters what brand. I just think in general, if you have magic electronic voting machines, that they can be hacked, and it's not like they're like putting them on Bitcoin and making them where you can't change anything. Like there are things that you could do to make it where it was incredibly hard to hack or to change things, but they don't do that. Like you literally can take from what I've seen, okay, you can take a thumb drive and change the votes. And that's just like changing, and that never mind hacking. And then they say they're not connected to the internet and everything like that. But we've seen multiple things, and even in the court, the guy showed how. But what they're talking about now, Brazil has brought this back into focus because they're saying this new guy got elected on the magic voting, which is what we all said that.
Yes, of course. And those regions, it's well known. It's broadly accepted.
Yeah, I can play. I won't do it probably today. Maybe that's what I'll play at the end of the show. The testimony of the guy back in 2006. Back in 2006, talking about how he was the guy who wrote the code and how he made the machines where they would always do whatever you wanted them to do. You tell what margin you wanted it to win by, and that's what you won by. So I want to give a shout out to Armenian Fly Mackie. I know he's been patiently waiting for me to get back as we roll out some more of the stuff in more places. So we are now expanding. The Smart Money Culture TV network is expanding, and as well, Impact Money Show Global Boost Media is expanding along with it. We will be in Los Angeles. We will be in Florida. We're going to be in New York and some other fun states. Right now, we're reaching 7 million people on their TV in Texas and Louisiana. We always appreciate all the viewers that we get there, and hope that you are listening as well. We're not financial advisors, but we have a lot of good stuff on here, and you can take advantage of some of this stuff that's going on. Let's get a heartbeat. Let's get the beat of the market with the great Matt Dixon. Matt, how are you, sir?
Hey, good morning. Good to be here. I've been enjoying myself going through the charts.
Oh man, It's really something else, isn't it?
Yeah, I'm going to jump straight in if that's okay. I mean, I know there's
Great.
a lot going on to talk about. I'm sure we can talk through these various charts as we go through. So there we go. We should be sharing screen now.
Yes, chart of the day.
Chart of the day. So this is actually, we're actually going to be focusing mainly on the interest rate chart that I did show you briefly yesterday, but this is actually quite interesting to go through yet again. Interesting to see where we're at on the dollar index right now. You can see we're right around this B area. We're actually just below the B area on dollar index. And we don't know the future, but sometimes we can learn things from the past. It doesn't say necessarily that the past is going to tell us what the future is, but we can certainly learn some lessons, and patterns do often repeat, especially when you see some of the data points being in a similar sort of situation. And I personally believe we are. So I've got quite a different view that I'm going to be propounding today about where we're at with interest rates, with inflation, and so on. So as I say, right now, we've got the dollar index right in the middle of this long-held channel. It's been held right back from 2000 and, what is it back here? 2007 all the way to today. So what's that, 13, 17 years or something? So that's the channel that the dollar index has held for 17 years so far. And we're pretty much right in the middle of that channel. And to be fair, the dollar could go either way. At the moment, it's looking as though the dollar's pumping a bit. And when we look at the shorter term chart, we'll see that. But let's just look at where we're at. So right now, we're at interest rates of 5.5% in the US. Now, if we go all the way back to 2007, we'll see we're at interest rates of 5.25%, almost identical. And we're actually right in the middle of the range with the dollar index as well. So there's a couple of things there correlate. We've got an interest rate very, very similar. We've had, a good period of growth, a long period of growth, and that's what we had back in, running up to 2007, 2008, 2009, the financial crisis then. So there's a good period of growth then, and they had relatively high interest rates because the growth was really strong. They needed high interest rates to try to hold back growth, to try to restrain the economy a little bit, stop the economy from overheating. And that was the big issue. The economy did overheat, really. And once it overheated, then they raised these interest rates, and the interest rates became quite a burden on the stock market, on the economy, and then we started to see the crash. So we got the 2008 world financial crash. Now, it's not as simple as that. Obviously, it was kind of the catalyst was obviously the failure of the ratings agencies and the misrating of assets and so on that caused misallocation of assets. So that was the catalyst, but there's actually, if you look behind, under the bonnet, as it were, the backdrop for it all was, there's a long run up to it. It's a long time in happening. And I was actually writing at the time, and I appeared in talks across the Middle East saying that this is what was coming around, and actually made a lot of money in the 2008, around that time, financial crash. I was selling Australian dollar against Japanese yen, and the Australian dollar collapsed and the yen appreciated sharply. And the yen appreciated because it's what they call a carry trade. And basically people used to borrow in yen, which cost next to nothing, and invest in other assets. And then when the crash came, they cashed out of all these other assets and put the money back into yen to repay their debt. And that's why the yen appreciated massively in the last financial crash. Now, in some ways, the US dollar has acted like a carry trade, very, very similar to the Japanese yen back then in 2007-8. So the US dollar, they had interest rates of zero effectively for a long time. And people were borrowing US dollars at next to nothing. It was actually they'd almost been paid to borrow money. So they borrowed money at these very, very low interest rates and invested around about the world. Now, when trouble happens, they then basically take the investments out of these other risk assets, etc., and it piles back into the US dollar. And that's why in times of trouble, you will see the US dollar appreciating. And it's also very much a safe haven anyway. So people go to US treasuries. It's actually known as the risk-free asset. US treasuries, T-bills, are effectively risk-free. And that's what all investments are measured against, that risk-free return that you can get on those US treasuries. So that's where people head in times of trouble. So just moving on from there, we'll move on step by step. So we had 5.25% interest rates, virtually identical today. Then we got the financial crash of 2008. And then you started to see the dollar appreciate. And that's exactly what I've just been saying, that basically money flows into the US dollar in times of trouble. And so it continued to flow into the dollar throughout this time of trouble. Then we got the stock market bottom, and the stock market bottom was pretty well, it's late 2008, we got the stock market bottom somewhere around there. And then we also got, obviously they reduced interest rates as the US dollar was strengthening. They could reduce interest rates and the economy needed stimulation because the economy fell off a cliff. And they also started QE at the time as well, so money printing. So they did everything they could to try to stimulate the US economy and get the world stock market and the world economy back on its feet. And with all that monetary stimulation and dollar printing, etc., you then started to see the dollar falling again here. And you can see then we had low interest rates, 0.25%, so effectively zero. And that's when Bitcoin was born. January 2009, Bitcoin was born right here at the top. So it's quite interesting when we see Bitcoin was born out of crisis, out of the crisis of 2008-9, the world financial crisis. And in fact, the first block, Bitcoin block that was ever mined, had a message encrypted that it was basically about the bailout of the banks, second bailout of the banks. So that was the reason that Bitcoin was born and when Bitcoin was born. And then we started to see Bitcoin appreciating as the dollar fell down here. And so we got some Bitcoin appreciation. Moving on quite a little bit, we got Bitcoin here up to $864. Now that sounds like we just had a crash, but no, it had appreciated to $864. That was quite amazing. But then when we got this fall in the dollar, we got Bitcoin then exploded higher until we got the COVID crisis, when again we got another crash in Bitcoin. So you can see the crises are kind of when dollar has strengthened at the top, all the crises here. So we've got the COVID low for Bitcoin was here at a local top in the dollar. The FTX crisis was at a top in the dollar. The stock market crash was at a top in the dollar. So the dollar always appreciates at time of crisis. And then at the low points for the US dollar, so you can see, for example, here, Bitcoin exploded to 20,000 at that time. We saw the Bitcoin previous all-time high, 69,000 at the dollar low here. And right now we're seeing the dollar has moved down quite a bit, and we're seeing Bitcoin now all-time highs or virtually all-time highs, and we've got the halving event. But I just wanted to show you kind of how the US dollar is attached to these things and how similar it is today. So what I really want us to notice is that we had 5.25% interest rates, or virtually the same as today, 5.5%. The dollar's virtually in the middle. And people are saying that the US dollar is about to, well, that basically inflation is going to get out of hand and they may even have to start raising rates further. I actually think that's not the case at all. And I'll just move over to where we are. Probably need to shrink this a little bit. Where we are at the moment with inflation in the US. So I'll just shrink that a little bit more. So this is very interesting to see where inflation is. So we had the tick up with inflation figures the other day. That was just a little move we had here. So everybody's talking now about inflation getting out of hand. The Fed is left behind the curve. As we said yesterday, there's all the, all the information. I'll just put that on again that we had yesterday just to show you about the stimulus, the response lag, the lag when you basically, the Fed does something to try to stimulate the economy. There's a lag effect. It takes time before it actually has an effect on the economy. So anyway, what they did here, this was back in 2008. This was the depth of the financial crisis. So they started printing money like crazy. That was the QE printing of the time to try to stimulate the economy. Now, they did all this money printing at the time, and we can see what happened, that basically inflation started to increase with that money printing. Then inflation subsided somewhat, and we started to get into another depressive situation even before COVID hit. The stock markets were actually showing real signs of tension, that the markets were about to fall, the economy was about to slow dramatically, and so COVID came in as a perfect cover almost. Not necessarily saying that's the case, but it
might have been though. Might have been.
Might just have been. That COVID was the perfect cover for money printing, which was absolutely necessary. They couldn't do much else than print money to stimulate the economy. And so COVID was a perfect cover for that, allowed them to print money like crazy. And once again, we saw, with all that money printing, we saw inflation go up to these highs of 9%. That's the fairly recent, back in 2022 now, isn't it? That we had the highs in inflation. This was really quite concerning. And then they started to raise interest rates yet again to try to deal with this high inflation. So they raised interest rates. We're now, from low interest rates of 0, they've actually now raised interest rates to 5.5%. And some are saying that they should raise them further but what I'm saying is that these money printing efforts were just a cover for what was wrong with the economy. The economy is in a mess. The economy is actually in a deflationary spiral, and it's actually being covered up by this money printing. And nobody would dare admit it, but I believe that's the case. And so they had no real way of stimulating the economy back in 2008. Back in the COVID times, no real way of stimulating the economy. And the economy currently is still okay, but I do believe that the economy we are going to dip into deflation and also recession. So if we have recession, that means that it's highly likely that inflation is going to dip. And I've got a dotted line here that I expect inflation to dip. So most economists at the moment are saying, oh, the Fed has taken their eye off the ball, inflation's going to take off again. The Fed are not stupid. They know what's happening. And I say that they really do know what's happening. They know what's going on behind the scenes. And they know that the big concern is actually growth is the big worry, that we are heading. They've seen the signs. They've seen the inversion of the yield curve, which is a classic sign. They've seen the money supply decreasing. There's so many signs now that the US economy is going to be slowing down dramatically, and we will be headed for recession. So we are going to see the inflation falling off very, very rapidly. When that happens, they're going to do everything they possibly can. And the good thing is right now they have some ammunition. The ammunition is that the interest rates are 5.5%. So they can actually drop interest rates by quite a lot. They cannot raise interest rates right now. If they were to raise interest rates for this so-called spike in inflation, which was nothing in fact, if they were to do that, they will cause another banking crisis way worse than we saw last year, a serious banking crisis. They will not and cannot do that. So they are going to be, the economy is going to slow. We are in a period of deflation. All this money printing is actually the reason why we can have 5.5% interest rates without slagging a slumping economy. It's because there's so much money in the system through all the money printing. But it's not saved the economy because, as I said, when I went through these monetary things the other day, that money printing, QE, is the least effective way to stimulate an economy. It actually channels money to all the wrong places and specifically to risk assets, and it pumps risk assets, which is exactly why we're seeing the stock markets at all-time highs, Bitcoin all-time high, property still very buoyant, maybe not commercial, but in general, property is still very buoyant. So it channels money into the wrong place. It's not the right way to stimulate the economy, but they're going to do the very same thing again. When the economy slumps in recession, they're going to start printing money again, but they can lower interest rates. As I say, they're 5.5. They can go back to 0 or even negative, which they will do. So we're going to go back to negative interest rates. We saw that in Europe. We saw it virtually in America. We're going to see it again. And we're also going to see money printing again on steroids when the economy falls off a cliff, which it will do. So this isn't what most people are saying, but I'm personally very confident this is what's happening. And I think there's a lot of signs out there telling us that when we look at the US dollar, where it's going and so on. So that's my thesis for what's going to happen. As I say, the move up in inflation is absolutely negligible, and the trend is still very much down. If you look at the trend from for the last couple of years, the trend in inflation is down. Yes, it's never going to be a straight line. And don't forget as well, inflation was actually driven externally. It wasn't because of excess demand in the US, which you can tackle that with higher interest rates, but it was actually external. It was driven by what's going on in Ukraine, Russia. So we saw a massive increase at the time in oil prices and in grain prices and food prices. And that's what drove up inflation. Now, if you have inflation, as we, again, just going back to, I don't know if I've got it here, I haven't got it here, somewhere else I looked, the reasons for inflation, there's both supply and demand reasons for inflation. Now, you can have supply prices, like when oil price goes up and grain and so on, that can cause inflation, and that's what caused this inflation. The best way to deal with that is not necessarily through raising interest rates as they did here. So this sharp rise in interest rates was in a response to externally driven inflation, which was basically on the supply side. It's not demand-driven inflation. Demand-driven inflation, obviously, you give higher interest rates to deal with that. You withdraw money from the economy to deal with that. But what they did, they gave higher interest rates and withdrew money from the economy. We saw money supply going down to deal with an externally driven inflation. It doesn't work. And that's why we're now beginning to see, we've seen a sharp fall in inflation, and it's going to fall a lot more. And we're going to see a lot more fall in growth as well, because interest rates are actually way too high for the state of the economy. So that's basically what is going to happen. We will see that unfold. I did a tweet on X today, and I've actually pinned it. I'm going to keep that as a record because, again, I'm one of the first to come out and say that. And there's a couple of firsts I've given. Again, I gave a first not long ago, wasn't it, with the pound against the dollar. And I said the dollar is going to flip the pound probably this year. This is very much the trend is very much down, seeing lower lows and lower highs all the way down here. And we can even see here that the pound has begun to topple against the US dollar once again. So at some point, we're going to see, and it won't be a straight line, but we're going to see the US dollar flip the pound. So that's when the US dollar gets the strength that we talk about. Remember on the first chart we looked at today, when the US dollar strengthens massively in times of trouble, well, that is what's coming. So although the US is going to be in recession and they're going to be lowering interest rates and they're going to be printing money, don't forget, this is actually a competitive thing with currency values. So the US dollar is still going to appreciate, even though they're printing money and got low interest rates, because the rest of the world is actually going to be in a worse state than the dollar, than the US. So Europe, UK, China, we're already seeing big problems in China, but everyone is actually in a worse situation right now than the US, and that is going to continue, and the difference and divide is going to actually widen. So that's why we'll see that. And we're seeing US dollar, yes, right, not US dollar, sorry, gold. I mean, look at this again. Bruce loves this chart.
Yes.
These solid green candles to the upside, and that's basically the dollar is a hedge against inflation, is also a hedge in times of uncertainty. And actually, we're in very uncertain economic times, and people want to put their money into something which, you can almost hold a bar of gold or a piece of gold or whatever. It's kind of real, and it's a real store of value. And Bitcoin is beginning to take on that characteristic. So Bitcoin started, we'll jump onto Bitcoin again. We can see those lovely green candles there on Bitcoin. Yep. This hammer candle that's forming, so looking very positive for Bitcoin. So Bitcoin, as we say, started back in 2009, and it was purely a risk asset. It was not in any way, shape or form a store of value or digital gold or anything of the sort. It was just a risk asset, and gradually people started pumping money in, and the price started appreciating. And it was a really bumpy road. We had bans from China, bans from Russia, bans here, there, and everywhere, all sorts of issues. But Bitcoin continued because it's actually decentralized, and it has a limited supply, and it's gradually migrating or evolving from being a speculative asset to being a store of value, to being real digital gold. So like gold, it is now a store of value. And so when we see stock markets fall, we now often see, so even in the banking crisis last year, and we saw stock markets falling, money actually flowed into Bitcoin. And this is because it's gradually evolving into a safe haven store of value. And we'll see that more and more now. And with the institutional adoption that we're now seeing with the ETF, the approval of the ETF, it will become more and more so of a safe haven asset. And even today, we can see, it's performed really, really well, despite the recent little hiccups we had with inflation jitters in the US and so on. So it's still acting a little bit as a risk asset, but I think it will mature more and more from being a risk asset. It will become a store of value. So in the future, we're probably still going to see some amazing gains out of it because it's got such a limited supply, and stock to flow is actually going to be better than gold after this next halving coming up on about the 20th of April. So it will still continue to appreciate massively, but I think the volatility is going to be less and less as we go forward into the future with Bitcoin. So it'll become more and more that store of value, digital gold, as it were.
Yeah.
That's the main thing. I mean, I'm sure you can probably remember. I mean, I know you remember back the financial crisis back in 2008-9. And can you see any parallels there, Bruce, of what's happening today?
It was, well, what did we have? We had the yeah, I mean, everything was so inflated is really the main thing. And I haven't looked exactly at what was going on.
You hit the nail on the head, really, Bruce. Everything was so inflated. That was
Yeah.
really, we hadn't rehearsed this at all, but that's exactly the point. The fact is, back in 2008, before the crash happened then, everything was so inflated. And they're the times that you need to worry. So when you just think back to what we showed previously about the fear and greed index, and we're actually still sky high on the fear and greed. And that was Bitcoin, but you can look at fear and greed on other risk assets, and you can see it sky high. People are still very much in greed mode. And we're still seeing some good news, but we see it in the stock market. It's just being focused on the top five. Well, it was the top seven, now it's the top five, and less and less breadth in the stock market rally that we're having. So that can turn around very quickly, but it is inflated is the actual real word that I hadn't even thought of, but that's how things are. All of risk assets are actually inflated right now. So because we're in a greed on, risk on mode right now, things can turn around very, very quickly. And what will turn it around? Well, we don't know for sure. But there are geopolitical tensions, and there's certainly macroeconomic issues. So something will likely turn it around. But before that happens, I think the outlook is still very, very bright for Bitcoin. This chart is extremely good, extremely positive from a candle perspective, but from many others as well. And we looked at the Fibonacci extensions. Bitcoin can advance a long, long way from here.
Yeah. I will, and I tell you, just being here in Paris as well, the ecosystem, it just keeps growing. I continue to be impressed with it. So many smart people, so many great projects, the technology coming out of it. These people are really smart people. They're the ones making stuff happen, and I'm very bullish.
Yeah. Here's a look at oil. You mentioned oil again. It's another one that's pumping really well, and it's because right now there are worries about inflation, but also geopolitical tensions still brewing. I mean, even not just Israel and the surrounding there, but definitely Russia, Ukraine. There's still a lot of tension there, and I know that
It is, indeed.
I think Russia.
Both sides recruiting again or drafting, however you want to call it, hundreds of thousands.
Yeah, terrible. And I know Russia were targeting the power stations, I think, in Ukraine, so they're kind of changing the focus a little bit, but that's still very much ongoing. So there's a lot of tension there, and that is driving oil higher. And at the moment, economies are not yet fallen off a cliff, so they're still reasonably buoyant, and so there's still good demand. And we're heading into driving season, I guess, in America, and I guess that'll push up certainly gasoline prices. Probably will have some good knock-on effects. As we say, it's not only supply, it's demand as well. There's two sides to the equation. So there's also demand that's pushing up, let alone supply concerns, which haven't yet materialized. When they do, that could have a big impact. But right now, there's demand is reasonably strong for oil, and that's why we're seeing oil continuing to push higher. And of course, it is correlated quite strongly to gold. And we're seeing, as we said, gold is yet again brand new, all-time high as we speak right now, this moment. Gold is at an all-time high yet again. So, absolutely amazing. So just jumping around some cryptos, we've heard some positive noises about XRP, that whilst it's still bumping around, there's no particular impulsive movement, although we did have a good movement up here, but there's some noises beginning to hear some noise that XRP could be about to explode higher. I don't know. I think the narrative for XRP is very good. The use case is absolutely universal, and I think it could but we just don't know when. XRP is one of those really sort of standalone tokens that doesn't tend to necessarily move in line with everything else. But when it does move, it really stands out and moves very, very strongly, as we said many times before. So I wouldn't be surprised with XRP. I think we're probably going to see some good movement there.
Yep.
Looking at your memes, Bruce, I can see your favorite there, Doggy, is up 3% today.
Yep.
Just tickling that 20-cent area again, just getting very, very close to it. So, but the other memes are generally, I mean, SHIB is up slightly, but in general, the other memes are down.
Yes.
A real mixture across the board, really, with cryptos. Aptos is up, Bitcoin is up very nicely. And yeah, so we see, Ethereum's up as well. So the big solid ones, BNB, of course, another big solid token. I think it's third market cap, in line with market cap. So the solid tokens are the ones that are rising. The riskier tokens in general are the ones that are suffering a little bit today. But right now, again, it's treading water, just waiting for the next big news, I guess.
Yep. Yeah, I think so. I think, I mean, everybody's watching it now. Everybody, that's really the thing. So more and more people get involved. More and more people are going to want to have exposure to these assets. I think, of course, we have the actual halving coming up for Bitcoin and for Global Boost, as a matter of fact, right around the same time there, that April 18 to 20, right in there. So, yeah, I think once that supply shock really starts to hit, and people start to understand that even more that there's less and less Bitcoins available. We continue to move.
Yeah, I don't think I've got it on here. I'll just check. But I did actually, and it came out. Oh, okay, I still got it. So this is the halving events I've put in here but I've actually put it on the S&P 500 chart. So I personally believe that halving is irrelevant. When I say irrelevant, I'm sure it is very, very important. But in terms of a pricing event, it's actually relevant. Because it will already be factored into prices, absolutely no doubt. So people don't wait for halving for the price to move. And this
Well, that's why we saw the big run up, 45 days ago.
Exactly, yeah. So these are the halving events against the S&P 500. So we can see very clearly it's almost the same chart as you saw if you broke it down on the Bitcoin chart. But basically, it's just a rising chart. Bitcoin came from nothing to 70,000. And the S&P rose very sharply over the same period of time. You put the halving events in, and it looks exactly the same. And that's just because it's been a good environment for risk assets, and risk assets have really prospered during this time. And you can put these halving events in on many different assets, on different individual stocks, different cryptocurrencies, and you'll get the same sort of picture. So halving is just another piece of data, fundamental data, which is already priced in, because as we said yesterday, markets are forward-looking, so they actually look at what's ahead. They predict as much as 18 months ahead what's going to happen, and they react in advance. So when you see an interest rate move in the US, it doesn't have any effect on the economy for many months, at least for many months. It has no effect on the economy, but it has an immediate effect on asset prices, and that's because markets are forward-looking. And so, as I say, that's exactly the same for halving. And so people saying, oh, what do you expect with halving? Well, we don't need to look at halving. We need to look at other drivers for the pricing.
Yep.
Pricing assets.
Amazing. Well, very good. Another great report. Another great week. As we have here, I'll be back home. I want to play this clip that I have queued up here about the magic electronic voting machines. About 6 minutes, so I'm going to play that, and then we'll close up the show. But always a pleasure. I was trying to probably get over there, but it's too fast. I knew it was going to be too fast. I'm not going to be. I would have to leave on Tuesday. My wife is just about had it with me, so you gotta. I mean, the father-daughter dance will help. I'll be fine.
Yeah, well, you definitely. We'll manage without you somehow. I don't know.
I don't know how you're going to do it. No. Awesome. Well, let's connect over the weekend and we'll go from there. But look forward to next week.
Yeah, thank you.
Thanks, Matt.
Enjoy the weekend. Thanks, everybody.
Cheers.
Always
Okay,
the best.
It's one of the best parts of the show, of course. Everyone always loves Matt Dixon here. I have queued up because it's so important. People are talking a lot now about the magic electronic voting machines, and I think it's really important that we talk about this, because this is something that these people in Washington have known about for decades. They've known about this for decades. That's I'm sharing the wrong one. I do want to say that one. Post for that one. Okay, and then I need to share another. Yes, this one. I have it queued up right over here. Share this tab. It's a short video, but I want you guys to watch it because it's really important. And this was in 2006.
Would you please state your full name for the record?
My name is Clinton Eugene Curtis,
And where do you reside?
Tallahassee, Florida.
And what is your profession?
I'm a computer programmer.
Would you please speak into the microphone so the audience can hear your testimony?
I'm a computer programmer.
Mr. Curtis, are there programs that can be used to secretly fix elections?
Yes,
How do you know that to be the case?
because in October of 2000, I wrote a prototype for President Congressman Tom Feeney at the company I work for in Oviedo, Florida, that did just that.
And when you say did just that, it would rig an election?
It would flip the vote 51-49 to whoever you wanted it to go to, and
Would that program that you designed be something that elections officials that might be on county boards of elections could detect?
they'd never see it.
Mr. Would you answer that question once again?
They would never see it.
So how would such a program, a secret program that fixes the election, how could it be detected?
You would have to view it either in the source code, or you'd have to have a receipt and then count the hard paper against the actual vote total. Other than that, you won't see it.
All right, Mr. Curtis, if you had been asked, you or others with your professional expertise had been asked to design a protected program that would protect the Ohio elections from against such software to fix the election, could you have done so?
If we've been asked to make a program that can fix the election, sure, anybody can do it.
No, could you have designed a program or a procedure or a protocol that would have protected Ohio against this kind of rigging?
No, you have to look at the source code. You have to get probably programmers from both or all parties to look at the source code and determine if there's anything in there that shouldn't be there. I mean, it's a simple program. You're adding 1 to a person's total. It's 100 lines of code tops.
All right, are you aware of whether there was any protective action in Ohio against this kind of vote rigging through software?
I don't know.
You don't know?
I don't know.
You were not asked to assist in the development of any protective system, is that correct?
No, I was not.
In Europe, have you reviewed at all the election results in Ohio?
No, I haven't.
Okay. Given the availability of such vote rigging software and the testimony that has been given under oath of substantial statistical anomalies and gross differences between exit polling data and the actual tabulated results, do you have an opinion whether or not the Ohio election, presidential election, was hacked?
Yes, I would say it was. I mean, if you have exit polling data that is significantly off from the vote, then it's probably hacked.
And your testimony is under oath,
Yes, sir.
and the testimony you've given is true.
Yes, sir.
Thank you.
Congresswoman Stephanie Caballero. Congresswoman Waters and I have the same question. Back to the podium. Who did you say you were asked to prepare?
I was asked by Tom Feeney. He's now a congressman. At that time, he was Speaker of the House of Florida, Yang Enterprises, which is the company I work for, lobbyist, and their corporate attorney. Wore a lot of hats.
And at the time, he was the Speaker of the House of Florida. Is that what you said?
Yes.
Okay, thank you. Congressman,
He's saying he was the lobbyist for the voting machine company at the same time he was Speaker of the House?
I don't know what the voting machine company, if he was a lobbyist for Yang Enterprises. We had NASA contracts and
And Yang Enterprises did what? Computers?
computers.
Okay, and he was your lobbyist, your
He was
company's
the
lobbyist.
lobbyist for that company,
And
yes.
he asked you to design a code to rig an election
Yes,
while he was Speaker of the Florida House.
yes,
This was during or previous to the 2000 election?
yes, October into September.
And did he ever express why he wanted a code to rig an election?
No, I immediately assumed that they were trying to keep you guys from cheating on it. So, so I wrote up the documentation of what you would look for in the source code, how you would make sure that you didn't get, taken advantage of, make sure that all voting machines had receipts, because that way you could back count the ones that looked a little funny. And I handed it.
By receipts, you mean a paper trail?
Yes, paper trail. And I handed that in to Mrs. Yang and said, here's your report, here's your program. And she said, you don't understand, we need to hide the fraud in the source code.
Hide the fraud, not reveal it.
Not reveal the fraud because it's needed to control the vote in South Florida, was what she said.
That's what she said.
That's
To your knowledge, was this used?
I have no idea. I was ready to leave, so I retired and left the company.
Your testimony a moment ago, I think you said just before you left and answered the Congresswoman Tubbs Jones' question. Would you just repeat what you said in terms of the exit polls?
Oh, the exit polls should not be significantly different than the vote.
And if they were, you would conclude what?
I would conclude someone's playing with the vote.
Not with the exit polls?
That's possible too.
Okay. I was gonna ask why
Something is definitely skewed.
something is skewed in one or the other about.
Right. To select which one, you'd have to see where the problem is.
Let me ask you one further question. Assuming for the moment that such software, that's what you call it, such software to rig a vote was used in one or more machines in Ohio or in Florida, could you today detect that if you looked at the source code?
If you could get the machines and they have not been patched yet, I mean, once they get in and touch them, anything can happen. You can also set timers to that, but then you see the timers. Then you'd have to take those machines, decompile them, which I couldn't do, but possibly a Microsoft, an MIT, something to do. You might be able to see it.
You might.
Not necessarily, depends on how good they are at destroying what they had.
Pretty interesting. Testimonial from 2006, and they're still using the same software.
The same software. Now, why do you think that is, folks? Why do you think that is?
Because they perfected the cheating.
Another great week, Sir David Porter. Thank you. Thanks to Matt. I know he already left today. We're about to run out of here, so I've been changing in the background as I played the video. Have a great weekend, folks. We will see you on Monday.
See you next week. Stay tuned to stay lucrative.
Your voice is powerful. When combined with social engagement, it's a force for change. Decentralized media paired with free speech is the catalyst for an empowered world and a unified, invaluable ecosystem. Join Global Boost, become a champion of free speech, and help to reshape the future of media.